All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at /ES. Okay, this is the S&P 500 futures, and this is my bread and butter. What I like to trade, pretty much every single day or multiple times a week in the market is, chart up /ES, and you can trade the SPY contracts daily. Okay, so we're going to look at, here I have my supply and demand zones. Okay, so if you guys want to take a screenshot and chart up some of these zones so you can tell where the supply imbalances are and the demand imbalances are. These are going to be your levels of interest, your areas of interest where you're going to make trades, right? The black zone is going to be our dead zone. That's where we're not going to be looking to make trades. That's the first key, right? To being a successful trader is having a game plan, knowing where and when you're going to enter and exit positions. And then you can use some other indicators and chart patterns and volume and price action to come in and really help you out. Okay. So here's what we're looking at right now. All right. I want to show you guys first these trend lines here. All right, the very thick white lines. It appears to me we have a little bit of a bear flag forming. Okay, this is our bear flag pattern. All right, and what you do is you'll duplicate this line and you'll put it at the tip of your, the top of your bear flag. Okay, the extension right here, and that'll give you the price targets, and it'll take us to our demand zone right in between about 37.50 and 37.25 on the S&P futures. Okay, /ES. And it appears that that's what we're going to see. Okay. So I think here, let me Google a bear flag for you guys. Okay. If you're not new, or if you're new and you need a little bit of help, okay, so the textbook bear flag right here. Okay, we're gonna Google it, and we're looking here at the Google images. Okay, and what is it doing now? This is our bear flag. Okay, right here. All right, so here's our big flagpole down. All right, and then this consolidation, this bounce right here is going to be your flag. And then as I did on my screen as well, you just duplicate this drawing, put it at the tip there, and it gives you your price target for you to hit on the bear flag. Okay, so that's the first pattern we're looking at, and we're doing well. Okay, we're heading up towards the top right here. And we may come into this supply zone here where there's a supply imbalance, and we may drop, or we may already be in that zone, and we may have peaked out when we're at this peak here right under 4,000 on /ES. Now the main thing that I want to show you guys is that it's been trading in patterns really easily. Okay, so if we look here, I want you to focus on this trend line here. All right, and this trend line here, that's what's known as a rising wedge. Okay, and that's when you're going to get a break down in the market. All right, so we have our trend line onto the top here, we have our trend line to the bottom here. We broke this trend line and had a bullish breakout. I was able to do some day trades on that one, and you hop in here on this demand zone. We're just seeing demand. We get the break of that trend line, we come up here into supply, and we ride that trend line, okay, that we have here until we peak out in our supply zone, and boom, next day we gap down, we come into demand. There's not enough demand, we fall out and just come back down, we rebound. Okay, and now we're doing the same thing where we're breaking this trend line here. Okay, and we're coming up and we're making another rise in wedge. All right, so here initially we broke that trend line, then here's our rising wedge. That's a bearish pattern that's going to let us know we're going to come down. Okay, I Googled that one too. Look, this is a rising wedge. Okay, so you come up here and you get the breakdown below, and boom, you hit your price targets down here right around the beginning of where that rising wedge started. All right, and that's what we saw happen here. We hit the top, we came and we broke down, we fell around to about 38.50, 38.75 on the futures. Okay, and we're repeating that same thing now. Okay, where we're breaking this trend line, that's what we're doing here. We broke that trend line today. We had a nice bullish pop. Okay, I definitely had a nice day trade. Shout out to all the OTT members. We did nice on some call options today. And so we got our break above. All right, and now it's looking like we're forming a little bit of a rising wedge. Okay, so I'll draw that trend line up right here for you guys, and this is kind of it right here. Okay, so boom, here's our rising wedge. All right, and we look again what happens with that pattern. If we get a break below that trend line, okay, we could pull back and fall back down. So what that would mean is that would take us, okay, back down to here, into this demand zone. All right. So then, all right, we're now in our demand zone right here, and we're going to be testing our bear flag trend line. Okay, so we'll zoom back out a little bit so you can see it on a bigger time level. Okay, here's our rising wedge. There's a possibility that we may drop. Okay, now this pattern is not 100% guaranteed. Okay, we could just keep going and rise up in here into the next supply zone. But if there is a true supply imbalance in the market, then what we're going to see is we're going to see the rising wedge play out. We're going to come back here and retest this trend line for another area where either we bounce, okay, and then we continue going up, or if we break this, this could be the beginning of our bear flag, okay, because we can see overall big picture, right? We have a nice bear flag forming, and we know that we want to try to catch it around the peak up here, and to get the short action and do it here. We have a nice bearish pattern right here as well. So we're looking at two bearish patterns, okay, our bear flag and our rising wedge. We're currently sitting in a supply imbalance. All right. And if we get the break below, I'd say either about 39.25 on the futures, or let's call it 38.90. Okay, those are going to be our two demand zones where we really need to have demand step in and buyers step in the market. Otherwise, the bear flag, the much larger bear flag, looks like it could play out, and that could take us all the way down to 37.25 in the market. Okay, so hopefully this made sense to you guys. If you zoom in here, okay, like on a 15-minute chart or something like that, you can really see and get a much better understanding of how you can come in here and day trade, off of these supply and demand zones. All right. So, we come here, and for instance, all right. So we come here, we know we have our trend line. Okay. So now we're using two things. We have demand, and we're bouncing off the trend line. And this is an area where you can enter. Okay. So boom, we enter here, we come up, we hit our level here. All right. And this was previously a supply zone, where we fell, right? We fell here, came back down. Okay, we came here, fell back down again until the supply is eaten up, right? And it's no longer supply imbalance because all that supply has left the market. All right, and we rallied. All right. And it really gives you a very, very good idea of when to get in and out. Okay, you can get in here, you can look, okay, well, we're keeping bullish momentum, we're keeping going, so you have no reason to sell here. All right, you see we get rejected here. You can sell here as soon as we hit, or you can sell once we're pulling back and you see that, okay, things aren't going too well. Let me go ahead and take my profits, right? And again, what do? We dip back into the demand zone, and you can enter here again into demand, come up here, sell, come back down, enter again, come back up, sell. All right, we come here, and it just makes everything a lot easier. And then once you use a little bit of technical analysis, and you're starting to see, okay, hey, well, we're in a supply zone right now. We have a bearish pattern forming on a smaller smaller bearish pattern forming. We have a larger bearish pattern forming. Let me use that market context mixed with the price action, right? Because you're going to see the price action. You're going to see, what are the candlesticks doing? Are they going up? Are they going down? Right? And then you're going to look at your volume and see what the volume is. All right, well, is volume really low? Is volume high? And that's going to be your confirmation, right? You're going to look here. You're going to want to see red price action. Okay. You may see us come back up out of here. All right. But that's why I call this the dead zone. Okay. You don't want to enter here going long, right? Because you're thinking, okay, hey, well, we blew past this zone, so let me just go long now, right? You don't really want to do that because your risk to reward is going to be skewed, right? And then, if you look here, you can wait till you come back down into this level and look to see, if you want to take it long here, or you can look to go short, once we start entering the zone. As you see here, the first couple times it was valid as a supply zone, but you've got to think, okay, well, all of those sell orders filled. Okay, boom, we got more sell orders filled. Here, there just wasn't enough sell orders. There was just more buy orders. All right, it's just a simple auction process, and that's how the market works. And hopefully you learned a little bit from this video. Got a nice little market recap. Okay, because I do think that there's a very strong possibility that we could be seeing the SPY or the futures, okay, trading at these levels at about 3,700 to 3,750 here in the next week to month. Not too sure how long it'll take to play out, but definitely just want to put that on you guys' radar.